So a very big welcome to the Forex forecast. Here's our disclaimer and warning. This has been prepared by Ideal Financial Group, CAR 299753 of Arita Proprietary Limited and Adesh Trading Proprietary Limited. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide, and then consider the product disclosure statement issued by and available from i-deal.com.au or email to jr@i-deal.com.au. Minimum commission, blah, blah, blah. Every effort has been made, but we give no warranty. To the extent permitted by law, blah, 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 blah. You can all read this, and I'm sure you've all read this before. Let's get into Forex. I don't know where that came from, but it came up quickly. We have no reversals to the downside looking for at the moment. We have some possible reversals to the upside in terms of the Aussie and the Aussie Euro. And that's fairly interesting because the Aussie Euro was starting to become problematic. Let's just see firstly where the Aussie Euro is, and then we all know that Greece has proposed something and it seems to be interesting. The first thing I would say with the Aussie Euro, it's probably got one more decline and then we can buy it. So I'd be holding off on the Aussie Euro, maybe down to 0.6697 or 0.6589. That would be the optimal places to get into. I hope you can all hear me well and you're all seeing me well. And thank you for very quickly getting into the webinar room. That's fantastic, and welcome. I'm pleased to see you all here. So yeah, a bit more on the Aussie Euro. The Aussie US dollar, now I still think it's got some good things about it, and I think that as long as it can lift itself above 78.16, then it's going up. The moment, if you're long, stop can be at 77.36. And it's trying down just a little bit, but I think that's we've seen a completed 5-wave structure to the downside, probably looking for 0.8383. Now, the US dollar index is giving a continuation warning to the upside. Now, we have been looking for the magical level of 92.44. That's been our big target area, 92.44. Now, it's possibly a little bit close, but when we scan back to the higher time frame, we see 90.12 and 90.77 as the possibilities for retracement. So if you're thinking of buying at 92.44, we do see something like a fourth wave up here. It's a bit deep, a bit of a fourth wave into here. It's a bit deep, but 90.12 would be the ultimate best place to buy for the long term in the US dollar index, hoping for 98.66 or 109.41. Now, what is the US dollar index doing with the Greek news? It's sitting there and not sure what to do. Let's check what the Euro's doing with the Greek news. Now, the Greeks have taken it. They have a meeting at 11:30. The Greeks have taken it, and the Euro's not really doing anything either. So you can't get too excited, but the Euro could get up to 1.18. That's a bigger target up there. And it's not nice below 1.1272. So take it or leave it. Our lives are in control of Greeks bearing gifts. And don't worry about soybean. We had some trades and dates, which is to buy the Aussie dollar for June 14th to 18th. And we don't have much else on the currency. So let's see how the Aussie dollar buying June 14th that I forecasted last time. So here's June 14th through to June 18th. So we've got a buying opportunity here. So if you're long, stop is at 76.70 or 79.60, hoping for higher levels, eventually towards 83. I quite like that area. 82, 88 is another one. Things are going to return a bit to normal. And I'm skimming through the currencies, but as I've said before, the US dollar should go up eventually, at least for the next leg, but it needs to clear 121 against the US dollar index to be certain of the long-term love. We're getting into a lot of retracement areas on the foreign exchange, and if we're looking to buy dips, you buy dips to 92.44, and if you're buying opportunities at the 92.44 area, needs a stop at 91.80, but below that, the last line of long-term buying for the US dollar is 89 to 90.1. Now, what's happening in the US is that we expect lower interest rates to start to come in over the next week or so and start for another month or two. So we cannot be too bearish. The switch is starting to go back on for interest rates becoming lower rather than higher. And I think I've forecast that in the last couple of webinars. So the best thing is, don't get too bearish on interest rates. The banks are starting to show, in Australia, the banks are starting to show some signs of being nice. And sorry for this stuff up on the screen. I don't know what's doing there. But I'm not bearish interest rates at the moment. And we'll look at that in the commodities. Do we have any currencies that people absolutely feel like need to cover wise? We'll do the pound and we'll do a few other things, but let's the pound's getting close to finishing. Notice here in the month that we've had basically these drives up that aren't going anywhere, and you'd worry about them below 1.57 on the pound. And you can see a lot of you get excited about it above 1.6 on the pound, and it's headbutting our overhead resistance. So I'm not that fussed on the pound going up from here. I think the euro may be the one that will benefit from this, benefit from the Greek resolution, because that's the sort of place that they get worried at. So the British pound, we can see here, this is the pound and the euro. So the pound gets stronger, looking for 147.67 as a termination pattern from its entirely big range back from 2000. So maybe there's a little bit more juice in it, but at the present, I'd be banking on the pound to weaken a bit and Europe to come back down, so Europe to strengthen, and the pound euro to come back to 1.3143 and then try to 1.4767. A stare at the Aussie dollar, we've talked about that. The big one, really big one, I've been keen on for 1.1451 has been the Aussie Kiwi. Now, I did say it was going up into the end of May. It's certainly been good with the Kiwi getting the proverbial kicked out of it. The Aussie Kiwi has been nice. And there's opening up the possibility of 1.166. And the skiing public of Australia will enjoy that a bit more. But my skiing trips have always been when it's 1.3 or 1.4, and that makes New Zealand an attractive place. So the theory is 1.1463. This area here will be good for the Aussie Kiwi. If it does perhaps go down towards 1.05, you buy it with a stop below 1.03 and eventually hope for 1.2354. Australia has said that they might like lower interest rates. We will be following the Kiwi at that time. So if that happens, then we'll get on the Kiwi rather than the Aussie. And I just want to check that we got those cycles. I haven't those up. I just want to check a bit of cycles. Just let me. Hopefully the computer's not going to die on me. It has happened before, as you're all aware. Any currencies that people want to cover, or we'll get straight into commodities? Is anyone happy with that? Okay, let's run down our slide rule down the commodities. And I heard something by I don't know what's going. Okay, wrong. Already got a preview of the equities there. So there you go. There's too many things going on the screen at once. I really need a Cray computer here. So we've done the Forex. Next week's going to be a pretty big one. We've got the half-yearly update, and that's going to be pretty big. Pretty big webinar. I'll look at everything backwards, sideways, and upside down. So just quickly, once my thing can work, here we go. Welcome to the commodities forecast. And I put up currencies because a lot of the movements seems to be about the US dollar. So US dollar flapping around tends to move the currencies, so move the commodities. So the US dollar longs, as I predicted, would come down into June, end of June, with the US dollar coming back, because that's been the really big trade. And the last people who have been hanging on, hoping for the US dollar to go up, are probably wearing quite thin. And that's starting to affect the commodities. US dollar down means some of the commodity prices in US dollars can start to go up. Possibly gold's responsible for that. So here's the disclaimer and warning. This is prepared by Ideal Financial Group, Corporate Authorised Representative 299753 of Aruda Proprietary Limited, AFSL 338674, and Adesk Trading Proprietary Limited. Now, this is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement issued by and available from ideal.com.au. Now, I am hoping and praying I've been recording this, because for some reason, oh, it's good, it's working. For some reason, my recording system, the normal one's bombing out, so I'm using always the backup. Now, we're getting into the area of derivatives here, and derivatives may make you lose more than your account size can handle, and maybe more than what your account size has. So please always use a stop loss when you're trading derivatives. Take this with a grain of salt, and understand it's not about your own investment objectives and financial needs. And some of these trades may not suit you psychologically, so consult a licensed investment advisor before that. So this is what life makes a bit easier, the bonds. When bonds are high, interest rates are low. Now, we've correctly forecast that bond interest rates will be going down, and bond prices, this is bond prices. So when bond prices go down, interest rates go up. I think I've given you that many times. So what we see is we're starting to see a little bit of a rally that may last into maybe August in the bonds. And then after that, it gets its wing clipped pretty seriously from August through to December. So we're going to get a relief rally in the bonds. And let's look at the bonds on this scale. And you can see here there's been a bit of toing and froing, and the hinge point, the really important bit, is really a break above 153 3/4. Above there, and we start to think for 160, we do see a complete 5-wave structure to the downside. This is shaping up as an ABC pattern, and you could, I don't know if you can see this, hopefully I can give you this. There's a bit of B-ness in here, bit of a triangle. So ABC up to 160, that sort of area, maybe a bit further. Everyone gets excited. At the moment, we're in a period where we're we can expect lower interest rates. And why is that? Well, Janet's been carrying on for the past 3 months at least, saying she's going to raise rates sometime this year, and she just hasn't. She's certainly not going to do it in July. She's certainly not going to do it in September. In October, they're really in the full swing of the election. She doesn't want the Democrats to be voted out. If they raise rates, the Democrats will will be less inclined to vote for Hillary, and young Janet and young Hillary about the same age, and I think that she's a Democrat. I really do, and so she's not going to raise rates until at least December this year, when basically the US election result is out of the way, and she'll certainly raise them harder if a Republican is in. So if a Republican's in, and when we look at my forecast, it's certainly saying this is going to happen. A Republican may have a better chance than before. I don't know why. Maybe because they're used to voting for Bush or a Clinton. I find that's really repulsive, this dynastic families, and certainly they'll like to go for Hillary, but the bonds are saying there's something up at the end of the year, and I think that may be a Republican win. And if that's the case, interest rates are going to go up, and Janet Yellen will fry the Republican winner, and then they'll be then the Democrats will be able to blame them. Now that sounds really, how would you say? That sounds really cynical about politics, but the more you see politics, the more cynical you have to be. Look at bloody Julia Layard and Kevin Rudd. Look at those two people going hammer and tongs at each other. Both of them have a completely different story, and Kevin Rudd's trying to be the nice guy, and Julia Gillard's trying to be the certain person that, this certainly is the way that it is. And Kevin's going, oh, look, I'm offended. Oh, my ego, I cried, and I'm a human being. Both of them are lying about whatever is happening. And that's just the nature of politics, unfortunately. So I think we find our interest rates are being guided by politics. So this is the commodity basket, and this is the CRB index. And we can see that we're coming in, and apologies for this stuff that's appearing here. It's not meant to be there. You can see the commodities basket start to get more stronger after the middle part of the year. So what that means is maybe the US dollar is failing. Maybe it means commodities are becoming good. At the moment, we just have to sit there and watch how it unfolds. That's the forecast anyway. Copper, we've had a bruising in copper. Copper has been absolutely bruised. And where are we here? This is copper. And it's coming down, and it's nudging some support back from March. The actual overall retracement that it's done is in the nature of a 38.2, and you would focus on the 2.15 area to 2. Now that's as low as it's been since 2009, but it's quite possible technically the way that it's retraced, and down there I think you'll find it will be worthwhile buying copper for the longer haul. We'll skim through nickel. We're coming up to a time when nickel could be useful. And what do we got here? I always get this wrong. I think it was around 760 the target for nickel. And we'll go to the 3 month, just whatever it is. And it's not really. It looks like it's more like November. So don't get too excited about nickel. Gold. we're now in the big reveal. We're now in the middle part of the year, and gold tends to turn up around about now. So I couldn't understand why everyone's getting excited about gold. Now there's some possibilities that gold will have a better correction, but it may have a bear market better correction. In other words, don't expect it to make historic new highs like most of these people keep telling us will happen. And don't get too excited. But it's around about next week or the end of this week we should be getting interested in gold for a bit of a rally. We can see a triangle here, so pattern-wise, we'd expect one more push to the downside. I'd like to see a shakeout. At the moment, we see that gold has backed off just a little bit up from the top end of the triangle, and it probably, the first quickest shorting would be below 1183, and we see that as an ABC pattern. So there's one more go on the downside for gold, which is relieving, and maybe the US dollar can help us on that. Coffee, all year we forecast coffee should be declining into around about this time. Where is it? October. And we're in this zone here now where it can churn. Let's have a look at coffee. We see coffee has, on this occasion, done a beautiful move. We got along from up here and we got into it and we got out earlier, which is good. And it's also rallied here. And now we're going to spend a little bit more time going sideways before it tries down towards 106, 118, and maybe even 91.2. So coffee at the moment, expect some churning, just a bit more churning, and then a dump down. Down around these levels, I do think that I want to buy coffee for the longer haul. It really has liked that 100 area, or whatever it is, means for since 2000 and goodness, since 2005. So 90 or 100, we've got to be looking, getting ready to get long coffee down there. Now, cotton, we had some good buying in cotton, but now we're waiting for August. Crude oil, now I think that $68 is where it should have a top and then pull back from for another decline. The forecast thinks it's just going gangbusters. Now, we're going to look at trades and dates. Something comes up for natural gas soon. But given the pattern here on crude oil, we've got one more push up to that $68. It's clearly a triangle. It needs to go a bit higher. The stop loss needs to be around about 60 bucks. Charles is saying, so you are not, yep. Charles is saying, so you are not saying, you are saying Janet will not raise until 2016 after the elections. Ah, Charles, I thought the whole thing finished in November this year, and then they get sworn in 2000 and November 8th. Interesting. Okay. I thought, so we got another year and a half of this bullshit with these people campaigning. That's revolting. I still don't think she's going to, still don't think she's going to lower, she's going to raise until later this year. It's not going to be this year now. She's not going to do it. Really, it's that long. That is such annoying an event. I thought it was, yeah, okay. It still doesn't change what I feel. I still feel that it's, if she's going to raise, it's going to be December this year. And more to the point is that the bonds are saying that it's raising at the end of December, whether it's election cycle or not. I still think she's not going to be that aggressive with the interest rates on the upside. And when does her term finish? Is the next question. She's certainly not going to be aggressive. Thanks for that, Charles. That's useful. 2016 is a primary, isn't it? Oh God. Okay, so let's get moving. Natural gas. We have a short in natural gas coming up, and we'll discuss that later, but then it starts to improve. So current commodity waves, where these are current waves up or down. These are reversals to the downside. We have none. And sugar is reversal to the upside. The issue with sugar is it really is a tough call, really. And it just keeps on getting weaker. So for me, I sort of think it's picked up today, or yesterday's, it's picked up in today's trading a bit. So the best thing is to wait for a break above $12.15. What we can see is a low around 11.83. Breaking above there would start to be useful with a stop loss below 11.50. So soybean oil. Soybean oil looks like it wants to continue to the downside. Let's have a look at, just quickly look at sugar again on a bigger perspective. Because my feeling is that 11.50 or even lower is quite possible on sugar. So we want a break-back point. And we see here a little triangle. It's broken down off. It's retesting now. So you need to get it above 12.50 on a longer-term basis to be that interested in it. There's the 12.50 area. So $11 might be the right area to look for in sugar. Now, natural gas, we had a trade in natural gas which took us nowhere fast. Notice that we've seen it look like a five-wave structure a little bit, but generally it's just not gotten above the old top over there. So on a monthly basis, how can you have a year and a half of campaigning in this government? And it's really for the same selection as it was a few years ago. And have you seen this television program, Madam Secretary, where Hillary Clinton imitation goes and saves a whole lot from a bomb blast? Just not very nice. Anyway, here we see here is natural gas has done nothing for many months. That would indicate we've got another drop down towards 2 maybe before it can start up again. And we'll go on and we'll have a squeeze at. We won't look at soybean oil, but the continuations to the upside include 10-year notes and soybean oil. Remind me, we've got to look at natural gas soon. So let's look at the 10-year notes, which is ZN. And ZN has been reasonably strong compared to the 30-year bonds. And you can see that it's starting to get clear of a few things. And it needs a little bit more of a push up. The seasonal start to go long from around now. So I like the 10-year notes. It's certainly breaking through the old low here at 126 and would have a target at 127.30. Now, I still think that this is possibly manipulated, but anyway, that's neither here nor there. So the 10-year notes are more likely to rally, but the 30-year bonds have also got some rally potential. Now, let's have a squeeze at our friend in need, which is soybean oil. And soybean oil has had heavy volume to the downside, and seasonally it may have a little bit of a rally towards mid-July, but then it rolls over. So I'm not that keen on soybean oil. Here's some commodity trades off the bat. Now, we've had shorts on coffee from the 22nd of May to the 3rd week of June. And we'll pick that up and you can see how well it works. That's from over basically here, 20th of May. And certainly that had a good move down, another good move down, and the 3rd week is the low here. So if you've been in that trade, you might want to just bank a bit of cash on weakness. Euro dollar also starts to move up. This is the euro versus the not the euro versus US dollar, but the euro dollar interest rates to start up from, in terms of price, to July, August from this week. Now, I don't like looking at this chart anymore, and I'll tell you why. Because it's so close to zero, it's just ridiculous, and it flat lines everywhere. So I don't like looking at it. It disturbs me why we have such low interest rates. It's a bit of my principles, I guess. Now, this is we're going to have a look at this one, and notice they're killing off more electronic contracts as we go. So here is what we're seeing on the weekly charts. It seems to be stepping down. Now, stepping down means that it's 0.39% at the moment, as opposed to 0.25, which it was over here. It's still 5/5 of bugger all, if you ask me. Seasonally, it starts to go up from now, and it's had a washout. So I think you'll find it rallying back up to around about 0.25, which is no exciting thing, but that's the way the finance of the world has been running. The other one are 10 years notes going long from about now to early August, so that's a trade-off from now. Natural gas is to sell short 3rd week of June, which is last week, to the 3rd week of July, which is tendencies. And also 30 years tend to rally from now till the 30th of August. So we've talked about natural gas. Now, have I talked about gold? Well, yes, I have. We have. Now, Mark wanted to talk about soybeans, and we might be able to get a wave count in beaners for you in a second there, Mark. Let's go for the cleanness, and we'll be getting into equity soon. I think we've done about half an hour on Forex and commodities. Now, the beaners, this is the monthly chart, so it still feels heavy, really, obviously in the monthly chart. This is a bit B-wave-ish, but this move down needs to complete some stage. So if it gets good and gets above $10, then that's great. Expect 11.45. Let's look at the seasonals. And seasonally, it does like to drop off from about now, which makes it unpleasant, into really around about October. So don't get too excited about the beaners unless it's above 10 and Octobering. I'd like to see it down into the 750 area. Let's see if we can pick up some targets. Down around the 750 would be pleasant, but more so probably about the 890 area. So that's it Mark there. Let's see if we can do those commodities. Beans again now. Off. And September wheat for Gary. Okay, just get the beaners up for a wave count for Mark. Yeah, so it's liking around the 750 area as well, as long as it stays below about the 1050. So this is a confused pattern. It says it's been confused for a couple of years. So so your wheat September. Okay. So at the moment, I'd like to see it try somewhere into this zone or somewhere into that zone. Now let's give wheat a chance. And you want sep wheat. Making higher lows in the dailies. Do you guys trade much of that, or is it because it's really always December deck week that we worry about more? I guess you've got deliveries and stuff there. In any event, let's see what it looks like. It's just, you're saying it's making higher lows. Well, this is saying 1-2, and the overlap I tend to agree with, and this is a bit more impulsive. So I'd say it's looking 466, 472 still there, Gary. I tend to agree with the way this feels. In the short term, another low. And Mark's saying that the 200 moving average on the monthly has been holding crude oil. The moving average on the monthly chart was what supported it back at the major lows at 34 bucks. You're saying that's resistance, Mark? Or is it cradling it? Okay. Okay, well, this is a 30 period on the monthly, which should be, oh goodness, how's like that's 3 years. It's certainly on the, this is the 5 month, which is, I guess, about 100 days, and it's holding resistance as well too. So yeah, sorry, what am I talking about? Okay, I'll take it as red for you. So the 15 period would be 15 times how many of that on the monthlies? That's 15 times 20. That's about 300. So I reckon the 68.85 is the area that it needs to get back up to, because there's some old lows here around that $75 and $77 mark that's going to make it hard. And then I think we have another go down in crude oil, and then we complete. And that's probably around that $37 to $34 area. Okay, so I'm getting a bit off track here, guys. Let's get anything else. I'll have a quick look again on my stuff for you, Gary. And so are you long the wheat? I guess you are as a grain exporter. So we're going to do it December, September. I can't even remember when they open and close these days on the grains. I just go electronic and just give it all a long Aussie short CME. Oh, okay, so you're doing a spread between the Aussie and the US. Okay. See, that's not real good on a monthly there, Gary. It's failed to even close above the old lows there. So you can see volumes come in as it rolling to the next one. That's no real big special thing. I'd get interested above 592 more so on the longer term. And again, descending triangle is not happy for your short CME. So you should be happy with the short CME. A bust below here at $4.81 would be a reason for shorting it with a stop above 513. So stop below 480 or 483. Okay, if that should kick a little bit further. And if you're long, and a break above 513 thereabouts. Okay, let's shift along in the magical mystery tour that is commodities. So we've got 10-year notes, natural gas. We thought about 30-year bonds. And so in my conclusion is that the biggie is interest rates, and gold and US 30-year bonds used to have a relationship. If the bonds went up, that gold went up also. So over the next couple of weeks, we should be sniffing around looking for buying of gold. We should wait for those people who have been promoting buying gold to the Australian public to swallow some words. And the big one, I think, is lower interest rates for a while. We're actually seeing that unfold in the property index. The property index has had a bit of a jump today, and I think you'll see probably more of it. It got down to the bottom end. I was putting out warnings on the property index, but now, unfortunately, the interest rate cycle starts to swing back for lower interest rates and more positive for the US equities, the property index. Now I need to do a little bit of work as well, and I think John has arrived. Have you arrived here, John? No. No, not here. Okay. Janet's term expires in 2018. However, her membership on the board expires until 2024. So her term as chairman expires in 2018, and then 2024 she has her own. She's still on the whole lot. Okay, so thank you. I think I need to. I still think she will. The more likely interest rate raise is later this year. What expires until? Okay, now I just need to make sure that I don't lose FX and commodities. And I'll fiddle around with these later. So where are we going with world equities? I can get rid of that. That's fantastic. That's one less load to carry. So welcome to the summer solstice, and I thought it was Frank Zappa that sang the song "The Greeks Don't Want No Freaks," but it turns out it's the plain vanilla Eagles, who were nice, clean-cut Californian boys, allegedly. I don't know whether they're Californian or not. Anyway, Hotel California, whatever it is. But things change around the solstice. We get more energy. I personally thought we'd get a bit more lethargy around the Greek event, but Greece seems to be what the markets are popping up about at the moment, and we'll just keep on rocking through. We've had the Greeks offer to do something. Now, will the Greek public agree to it? As long as they've got their money out of the bank and the government can't tax them, and they're hiding it in their beds, then it doesn't really matter, does it? They're just going to do whatever they want to do. Here's a disclaimer and warning, and so it'll be another 3 months and there'll be another Greek crisis. Warning and disclaimer, prepared by Ideal Financial Group Proprietary Limited, corporate authorised representative 79299-753 of Aruda Proprietary Limited, AFSL 338674, and Ades Trading Proprietary Limited. This is general advice and does not constitute financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investing. Minimum commission, interest rate, platform fees. I don't think there's platform fees on it. Dividends, but there's certainly a lot of exchange charges. A lot of the exchanges, including the SFE, keep on putting up their prices so that they actually exclude normal traders from getting there. $75 to see the SFE if you're trading through a broker in some instances. Doesn't make any sense to me. While we've made every effort to ensure the accuracy of the information as at the date of publication, we cannot give any warranty or representation as to the accuracy or reliability of completeness of the information. To the extent permitted by law, we accept no responsibility for any errors, misstatements, negligent or otherwise. The information is provided is based on assumptions or market conditions and may change without notice. Therefore, trade with a stop loss and keep your head down and don't overtrade. And what else can we say that's of the compliance orientation? Basically, this is about derivatives. I'll be talking about things you can trade derivatives on, and it'll be interesting to see how it goes. But generally, trading may not suit you. This is good. Here we go. So, bonds have fallen into support, number one. Short-term, medium-term, and long-term interest rates look set to drop for the next month or two. So this should provide us with a bit of equities positiveness on top of or aside from whatever happens with Greece. We've talked about the bonds and we've talked about those ones. So here's the normal year forecast for the Dow. It's going up. Here's the longer-term forecast for the Dow. It's going up. Now, we've had a struggle street pattern in China. We've been clearly seeing that, and we saw that would have been at the end of the week before, not last week, but the week before. We could see that pattern emanating, and I was warning that we should be seeing a fall in China. Now, the best target is down to 41.47. These are more dramatic targets, but notice that the volume has been falling as price has been falling also. So volume's contracting, price falling. That means the 41.47 area is really the juicy spot. So we've been negative on the yin and positive on the yang. The yin being ETF with a $38.70 target. It's the ETF in the US. Now the yang, we've been positive on the yang, looking for $75.34. The yang is a negative play on Chinese stocks, To what extent it's a perfect fit for Chinese A shares index, I don't know. But the rally, this is where we can expect it to. If it gets really excited up to 90.14. So the yen, once this Shanghai A shares, once the Shanghai A shares index gets into that zone, 41.47, start looking at the yen. And then we get long for another good move up. So here's some indexes that are in the potential moves. Here we go. I'm going to have to type these in. Apologies. There are no stock signaling the end of the uptrend at the moment. No stock indices signaling the end of the uptrend. There are, however, a few stock indices signaling the end of the downtrend, and one of that is the Dow Jones, is the Australian Financials Index. The other ones are a DJUBS, X Energy, which is signaling the end, start of a move up, and also the UBS Grains and the US UBS Softs, which I think is soft commodities. There are another couple, and I'm just going to have to write these down. There is other ones that are in a fourth wave looking for a movement up, which is the Russian trading something or other, and the Dow Jones South, I don't know what that's called. That makes no sense to me. But the XJO is in that category as well. So there's not a lot of, if you think you're at the end of the trend in the Dow and all that sort of stuff, it ain't just yet. So we're not going to talk about waves and things like that. At the moment, we have bullhorns in 448 US optionable stocks. Some interesting ones are iShares in all countries, including Asia, looking for higher levels. Apple, and that comes up with the seasonal buy at the end in a couple of weeks' time in early July. So that's why I've got that. Let's have a look at Apple. Now this is Apple. Hopefully it gets a flip back down to 119.42. Then you could pick it up for the next move up. And that would be towards 169, which is scary. So a flip down to 122, 119. At the moment it's pulling back, but you're going to get another chance to buy it. So into this zone here is worthwhile buying with a stop below 118. The other one is Agilent, and that'll help Kevin. Agilent also looking for $38.66 on the downside. It's creeping down into that zone, maybe to $38. Your stop would be below $37.55 if you're buying it. And we're going to look at Fairchild Semiconductor. I just love the name of that. It's like Jefferson Starship. It's a really cool name. And Fairchild is probably going to visit the $18 to $17.47 area. Notice the volume is a bit high, so you'd back off on that. It's not so good at bullhorns at the moment. A lot of energy stocks are coming up on the board, like LECO and LEI Lucas. Let's have a look at LEI. And I think that's already gone, so that's something you might want to put in your little shopping trolley tonight with a stop loss below 14 cents. That's a penny dreadful in American terms, isn't it, really? Anyway, it does seem to be one of the optionable stocks. I don't know how it is, but that's looking for 21 cents. Chinese stocks are also showing up on the Bullhorn's warnings, which is not a surprise. There are some solar systems, China Digital, and Telecom Argentina has also come up. And United Technologies, UTX, come up as interesting. There's a few bear pause warnings, 556. So the ratio is about even, about neutral. There's no extremes of depression or excitement. The financials are on bear pause. The healthcare are on bear pause. Big Pharma is on healthcare, bear pause. So here's some times and trades. We've been talking about Altria, which is code is MO for some reason. We're looking to buy in from April to late August and again in early June. Let's have a look at that, seeing how it's played out. And early June sort of worked a bit. It's still been a bit weaker than we would have liked. AT&T, third week of April for run into early August, and again early June for early August. So that would be T, I think it is, the code for AT&T. And that seems to be working out well. You might want to take some profit up at 35.89 or 36.70 and then run your stop up to $34.62. Apple in early July to the third week of July. We've talked about that already. Amgen, early July to third week of July. Dean Foods has also got a buy on. Goldman Sachs is a buy at the end of June. We did have a short on it. Let's see how that panned out. That short went nowhere. So Goldies has probably got another kick on. Stop would be at $208, target $225. Hang Seng from mid-August to early August, we haven't been too inspired by the Hang Seng. It's just sort of been hanging around waiting for China to do something. But even when China was weak, it didn't fall. So go figure it out. It's probably buy-worthy with a stop below 26,700, targeting 27,811. Procter & Gamble's and VFC, both late June, and a quick look at those, and we'll get on to the Australian stuff soon. Procter & Gamble's probably one of the better ones. Nice basing formation on the dailies. Be nice to get it for 73 bucks, but I don't think you're going to get it. You certainly want to be long by the time it gets above 83 with a stop loss below 78. And on the weekly charts, we can see some strength already coming in. So above 81.40, expect 83.50. Any stocks with bring out your dead, or can we move on to the Australian markets? Do we have any ones left in your portfolios that you're not happy with? Nothing? Okay. What about any overseas stocks you want to bank the cash in? Nope. What about back on your bikes? Nope. Okay. Conclusions. The Greeks feel like they're out of the way for the next few months. Let's go have a look at the charts before I open my mouth, because I haven't shown you German DAX and what's happening at the moment. Okay, so what have we got here? The German DAX has banged into the 30-period moving average. That's one black mark against its name. It's in a confused trading pattern, and it needs to close above here at 11,329 to turn it any good. So I like the fact that we got some Greek stuff happening. Eventually, Greece will cause a problem. I do think that Europe's probably a little bit on the suspect list, a little bit more. Now let's look at the seasonals on the Greeks, or at least the Germans. And the Germans generally start to top out after mid-July. So maybe it's going to hold up till mid-July, and then they'll realize they've still got a problem with the Greeks and lob down into October. I'm okay with that. Let's have a look at the FTSE. The FTSE has not had a personality transplant and certainly is firing off some worrying signals, and it's may try and chop into mid-July and maybe hold up into August, but then October is the likely decline. So we've got a lot of blackness going on, and maybe a rally back up to 7,000 would be a place to get short in the. So at the moment, I can't say. I think they're realizing interest rates are going up. They're not going to be as good as they have been for quite some time, but they're just hanging on. And we'll get a bear market rally in these stocks. Now, the Italian IBB has been one of the darlings for us. It locked in on a nice low, and now it's also head-butted some important points. So if you did get long up here, it's time to bank some cash and raise your stop loss to around about here at 22,790. See what the US Euro stocks have got in store for us. And it's got to the 30-period moving average. It's gone, oops, I'm not sure I should be up here. We are dealing with Greeks bearing gifts, and then some European will say, no, I want my money back. And so we're a little bit more in the mess. But I think that them doing a deal and the Greeks appearing to be amenable, I think they've got to go to some sort of referendum to get the Greek approval. And if it means taking away money from Greeks, they're probably not going to like that. So they're not going to vote for it. It takes a while to do voting, so they'll probably be toing and froing. The good thing is lower interest rates in the US will probably support the US. Let's see what the US market has done for this. At least done with this information. We can see that I was told that the E-mini did really, really good things, and it really didn't. It still hasn't, still 21.13. This little pattern here should cause a pop to maybe 21.39. That's the next target. If you do feel like being long the E-mini, I think you'll find them moving the money out of Europe, just going, I'll wait until the Greeks have done their referendum, and 21.39. So Europe's still not so flash. And we'll squeeze quickly at the Australian SPY, which has done SFA tonight. That's nothing really. Does anyone have any exciting questions, or let's bang off into the distance for the Australian stock area? And I don't know why I'm not recording this. That's quite disappointing. So I apologize to anybody who hasn't seen the recording. Have any exciting questions, or let's bang off in? Apologize to the recordings have been, to both softwares have been a little bit funny, but at least you've seen it live. I have got it recorded using the GoToWebinar thing, but it's not actually converting. So it's possible we'll get that. Now I'm getting reports here saying Seeking Alpha stocks soar on Greek hopes. It doesn't seem to be what's happening on the price action. So the journalists are certainly having a field day, but they're certainly not giving us anything that good. So I like the US. I'd be cautious of Europe. I want to buy China on a dip, and that about summarize it up. The FTSE could be okay until August. Now we'll do a run through on the Aussie market. So here we go. This is my summary. Greeks out of the way for a few more months, but then they become a problem again. Interest rates lower. That's helpful, and it may help for the US equities markets a bit into late August, early September. Now, the Australian stock market generally has a cycle down, and we'll talk about that. I think we're heading towards happy days. We're probably not just there yet, but I think we'll be getting into the more interesting stock market stuff soon. Here's a disclaimer and warning. This has been prepared by Ideal Financial Group Proprietary Limited, Corporate Authorised Representative number 299753 of Aruda Proprietary Limited, AFSL 338674 and Adesk Trading Proprietary Limited. This is general advice and does not constitute financial product advice. It does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our product financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investing. Minimum commission, interest rates, platform fees, dividends, variation margin, and other fees and charges may be applying. While we've made every effort to ensure the accuracy of the information at the date of publication, we can give no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligence, or otherwise. The information provided may be based on assumptions or market conditions and may change without notice. To the extent permitted by law, Ideal's we should not be any losses, blah, blah, blah. Trading of derivatives can be risky. If you trade using CFDs on this, then losses can exceed your initial deposit. Derivative trading may not be suitable for everyone. You should fully understand the risks involved in seeking independent financial advice. Ideal, its associates, officers, or employees may also have interest in the financial products referred to in this information by acting in various roles. They may buy and sell the financial products as a principal or agent, and as such may affect transactions which are not consistent with any recommendations, if any, in this information. I think we've had enough of the warnings. You over that? This is the normal forecast from March, April low. Now, we have seen that this stock market could have gone down, and we were talking about the 5,500, when it got into the 5,400s, a little bit deeper. So it's a little bit weaker than we would have expected. But the overall forecast still says we might finish the year on a positive note. We talked about, don't worry about FMG. We've seen a dip into mid-June. A normal year has a dip into mid-June and a rally for most of the year. So we're working to a normal year's forecast. Now let's look at the XAO, which is the most statistically significant data that we have. And it tends to start to rally from about now into August and then rolls over down into December and November. That's its general pattern. The current rally is somewhat corrective in nature, and it has not gotten above 56.08 really on a closing price basis. It probably could, you could push it up to about 56.30. Clearing above there would be good. Should we get some help from the Greeks and some resolution tonight and lower interest rates, 57.62 would be the retracement area. So 56.69 will be a nice first target, and 57.90 would be the next target to get to. We see that it's done a 61.8% retracement. So it's provided itself, but with a nice retrace, but there's a bit of overlap going on here. So it's a bit of a worry. I'd say 57.90 would be the max that we could expect on the next leg up. And not only that, we should have our eyes open and peeled for eventually seeing 51.44. Just given that the way that markets work, that might be in later December this year. They might decide interest rates are going up enough. Anyway, whatever it is at the moment it's still okay with a 54.39 as a possibility. Got down to what, 54.53. So it's possible into here, but below 5,000, then we start putting on our bear suits. So it's still a bull until it gets below about 49.30. 51.44 is still possible. So here's our different counts. And the XFJ, it called for a forecast in May and down into late August. Let's see how that's gone. This is the weekly chart with far too many things on it. And it tends to bottom around the second week in July and be safer after the third week in July. Now, there is a bit of a push me, pull you effect that goes on with the various banks. Probably comes back up to around about the 66.50 area, maybe 66.55, before it can have another push down. So over the next week or so, why not expect a little bit of a rally? But eventually, I think your safest buying is after the 24th of July in the banks. Now, CBA is usually one that likes to bottom first, and it may already have bottomed. So for a while, CBA has been my preferred. You get more aggressive on the buy side, really, after the 10th of July, but that's okay. I'd rather be in CBA, and the obvious reason is that it pays dividends then, the next one. And up towards, this is ANZ, up towards $34. I don't think it's going to have a lot of juice over the next couple of days. I think it'll find washing around, and then after the 31st, it starts to get juicier. And we've done Westpac. NAB is one that I think has the potential. It's starting to show better signs at the moment. If you wanted to be long, you could be long with $32 as a stop on NAB. Westpac I haven't liked, and I still think there's really a question mark over its head until October, with possible rally into July. I'm just not sure about Westpac at all. One of the other ones we've looked at was Bank of Queensland. I'll move along. We do have a buy coming up in Bank of Queensland. It gets better after early July, but Bank of Queensland might be one to look at. Our material space calls for late July, early August as a forecast for a top. Let's have a look at the actual price actions and see whether that's actually true. And the price action is not really doing it justice. And I've been talking about, I think, 8,300 or something. Should it crack down below 89.58? The seasonal pattern, as opposed to the forecast, generally likes to see a low in October with occasional outside push down into November. That's an outside chance. So late August. So Materials, I don't know. I like to think that they'd be useful, but the banks are okay. I think we'll get a bit happier days after the early July. We should get some tax loss selling, which will soak up some dollars for people. People sell out. You might pick up, I think you might pick up some of those things that people are wanting to chuck out. Stocks like SEK obviously have had the proverbial kicked out of them today. I have been targeting down towards $13.60 on the downside there. This won't update here. Does that? 1360, but there's actually another target a bit lower down, which I hadn't been thinking about, of $12.51 on SEK. It's been hit hard on volume. We want to wait for it to get into a bit of a triangle. 1360 was the target here. I want to wait for it to do a triangle, and we haven't got that yet because we've only had 1 day of destruction for it. Things like realestate.com. Now it's been selling off, and one of the reasons I've been worrying about the property market has been this. At the moment, you're probably getting an get out of jail card if you're long REA, looking for maybe as high as $45, but generally targeting around the $43 before another dip down into $35.24. And the other one was car sales. It's been backing off on the weekly, but it's not as bad as the other ones. Let's go and visit the property index. And you can see strength in the property index. If it blows through 1312, I think you'll see it to new highs or new recent highs. And then if it gets there, my interest would be seeing probably up to the 50% retracement at 1558. While it's overbought, it's still trending up. The healthcare index is another index that has been not performing that well lately. It has got a double bottom now. A break above 18,400 would get it out of jail. I have been thinking about 17,644. So watch how it performs. It's been falling all over itself a bit lately. The struggle street pattern that we saw in QBE, I did say a breakdown below $14 would yield some problems for it. And I can't even see that. You can see it has broken down below $14. Hasn't done it really decisively. And I think it broke down a little bit later. But anyway, so it's been fiddling around. It's still heavy-ish. Probably best left for buying over the next, where are we? At the end of July, maybe middle of August. So it's had a good move, but there's a lot of long positions that have got to be unwound. Here's some bull horns warnings. We talked about AMP. Remember, we had the sell on AMP for a while, and it's come good. It's had another go at the $6 area, and I think you want it to break above 627 before buying it with a stop loss below $6. CCL, let's see how it's gone today. This is based on this morning's work. CCL, nothing really inspiring in the rally. So maybe up to 956, but then down to 898. I'd rather buy it down there. CSL, and see how it's gone today. It looks as if it's probably done okay-ish today. Yeah, okay-ish. Volume decreasing as it's rallying. Maybe gets up to $89 before declining again. FXJ, and then we're looking for 84.06. On the FXJ, $1.44 has been the target area on the top side. It's still okay as long as it holds above 70 cents. It's just not doing that well in the shorter term. we're seeing heavy-ish volume to the downside, so you might expect 77 cents before a bounce. Doesn't seem to want to get out of its own way. Qantas, it has a 5-wave structure to the downside. It doesn't bode well for it. Now, Qantas has been raising prices because they've had lots of Chinese tourists. If the Chinese tourists disappear, then they're a bit in trouble. We can see here, target would be at $4.11 for Qantas. That would be okay. Backing off down to $2.71 would be where you would expect it. So if you're thinking about buying Qantas, somewhere between $2.71, maybe $3, you can start accumulating. Stop loss below $2.60 for a final drive up to $4.11 before a bigger decline. QBE, we've talked about that. Wesfarmers has been, we tried a dagger catch on that. It did not work. And 38.96 is the downside. Woolworths, we tried a bit of a buy once they started to sack the CEO. Then we found out he was going to be there for another 15 months. So $25 is still the target, down to $24.90. Here are some bear paws, and it's IAG. And my conjecture is Warren Buffett's playing some sort of big scam on us, because IAG really, it's really buyable down at $5.13. I don't know why he stepped in here. It might have been the old low here, but I don't think it's really the best stock. People are buying it, I guess, because Buffett's buying it, but it needs to clear through 580 if you want to go long looking for 611. At the moment, you could get it down to 554 and the lower targets I've given you. So it's on a bit of a bear pause warnings. So we're going to have a look at some stocks and things that are in different various waves on the Australian market. We'll look at the indexes, and this might take a little bit of time. I've got to pick those off. So we'll run through some of the questions. Some of the times and trades. AGL, we're looking to buy the third week of June for a run into late August, early September. What have we got in the box here? AGL. AGL's proving strong and providing strength, so I think that's okay. Looking for $17.83. It's certainly cleared through those. So, and the third week was last week. So if you want to do AGL, stop is below $15. Hope is $17.83. On the weekly chart, we see a pattern that we want to back up with a stop at $15.70, just because it's a bit struggle street. What's the next ones? ALS, forget about ALS. We talked about AMP, and AMP starts to be a bit of a buy soon. This is not the one. Westfield, it's looking for a rally into the second week of June. This is not the one that I was looking at. I'll read this out. Crown is useful, because for some reason what I put down isn't here. Crowns really starts to be useful in the middle of July for a run into August and September. Now, where can we think about Crown? And I've been on public record with the $9 and something or other thing. Now that he's got Mariah Carey, I guess there's going to be a few jobs for her at the casinos. Singing $9.54 is the best area for Crown to get into. I think about it down there. Eric is saying he's not silly, is he? Just what I thought. I hope he didn't have to sleep with Robert De Niro to get him out to Australia for his ad that he wants. Get us singing to get the shares up. Although Robert De Niro, Mariah Carey, I wouldn't sleep with either of them, really. Three, perhaps Erica. Goodness. Who's got the only question tonight I have is who's got the worst taste, Jamie Packer or MC? Michael Clark? Is that when you met Michael Clark? Oh, Mariah Carey. Yeah. Yeah, that's hard to decide, isn't it, really? Yeah, who's got the best? I don't know. Do you remember those interviews she used to have when she was sitting there like 3/4 naked, not half naked, just talking shit to the interviewer? I don't know. Thought she was completely off a tree at that stage. Maybe had a nervous breakdown or something. In any event, let's have a look. Flight Centre is still worthy of buying for a run into end of August, around about now. So let's have a look at Flight Centre. Probably with a 41.28 on it, if you can get it down into that zone, or on a break above $45 with a stop below 42.50. Yeah, Flight Centre features prominently on things. We can see how preferences come out here, Mark. Wesfarmers. Wesfarmers has a long, but it's not working. Wesfarmers has potential for, it says, for a rally from around about now. So where would you pick it off? Probably around about the $39 area. You'd have to have a go. Yeah, so Westfield for a rally into mid-July. That's still also on the case. So we've got here Macmahon Leighton's by end of June for a run into late August. Now, I don't know what the code is for Leighton's anymore, unfortunately. Does anyone know what the code is? Leighton's? Something CIM, something unrememberable. Thanks, Richard. And so it's still got $24.82 in its sights with a stop at $22.31. So hopefully if it can buy it, you can get above 23.59. That's okay with a stop below 22.51. We also have short sells for the third week of June into the rundown at the end of June. Now, I think that actually has run its course, so won't be talking about that. TCL is a buy at the end of June, Transurban. It doesn't seem to want to go down. I still think that's okay. Maybe if you got it 960, you'd buy it with a stop below $9, looking for probably up to 1274, or if it broke above 1016. I think that's a little bit more on the cards. We also had Wattle. We talked about Wesfarmers, Westfield, and Westpac. Let's look at Westpac. Westpac target towards $34.46. Stop would be at $32.31. Now let's have a look at this gold index that the Australian market has. And this is probably not up to tonight, up to today. There it is. This has got me beat because really we should be heading into a lower roundabout now with a retest around about the late July. And I don't understand why people are just buying it. Let's gravitate to what gold is doing, because if the US dollar index starts to go down, gold might get a little bit more of a push on. So let's have a squeeze at gold. And notice it's backing off here. Maybe it went up because they were worried about Greece, but certainly below 1184, you start to worry about this. So I'm not going to be too excited about the gold index until the end of this month or early July. And it's time to bring out your dead. These are stocks that you'd rather not admit you had, and they're sitting, festering and smelling somewhere. ERA. Okay, Eugene. Remember what I said about this one? That's not very nice, that entire smash that it's had. You'd think that it's going to die if they're closing the mines. I don't know what else it does. I don't think it does anything. Why are they closing the mine? Has it run out of uranium, or is it for environmental reasons? Is it something somebody else can revive? About the only thing I could say is have a stop below 32 cents. And how come your stop wasn't up here or there? I can't think of anything more than other God, going to God. Is there anything people want to do in terms of banking the cash? So this is bank cash time. SHV select group. Okay, SHV. Certainly first blush you think $11.34 would be a nice place to bank some cash if that's a fifth wave. At the moment you want to run a stop if you can with a stop below $10.27 and a pullback to $9.10. So there is divergence. Try to unload some at 11.34, maybe 1/3, and then just run your stop a little bit lower, 10.60. I don't think you get rid of everything because it hasn't quite done enough on the dailies there. Now Senitas, SEN. This has been rock and rolling. Probably has about 16, 17 cents on its target. And what else could it be doing here? Yeah, 20 cents is also a possibility. Volume's good, so 16 cents next target. If you feel like shelling some out, 16 cents is a good spot. Stop below 12 cents. AJX. Alexium, it's a mess, isn't it, really? ABC. Probably the best bet is to run a stop below 62 cents and hope for 80 cents. And possibly closer to $1. This is a fourth wave of some sort, but it's gone a little bit deep. So you might get $1, but mainly the 80 cents area I'd be targeting. Okay, and if you really wanted to run a stop is at 53 cents. Now the next thing that I've done a bit of a run, and AMP is in a fifth wave to the downside. Bit of a five-wave structure to the downside. So it's possibly finishing this garbage that it's been in, especially on a break above 637, as I said before. The other one is FMG. Now, FMG, I'd like it to try $1.85.